I will give a few disclaimers to start with. Okay. So the first of the disclaimers that I am giving is that I have not had much of an experience as far as health insurance product administration is concerned, and thankfully I have not had an occasion to avail of health insurance. So because my organization RBI has provided me with a medical facility. So, but I have I have also done a specialized diploma from IIII, which I think gave me a basic idea about what health insurance is. The other part of health insurance is that I was aware is during the course of handling grievances which were there relating to health insurance. And the third of my interactions relating to health insurance are because of myself being associated with vetting of one of the regulations which is in the health insurance domain. So this health insurance regulations of 2016, though it came in 2016, I was not associated with the vetting of these regulations, but I was associated with vetting of the regulations of 2000 of third-party administrators health services regulations. Then if Mr. Amandeep Singh sir has joined, maybe I have some point to relating to that also. So he is not yet joined, but I will talk about those aspects in due course. A plain reading of the provisions relating to these regulations is what I will try to do again. You will have occasions to see these regulations in operation while we are dealing with underwriting of health insurance and also at the time of claim handling in relation to health insurance. So you will have more inputs, and people who are in the field will probably take you through the nuances of health insurance process. But let me just give an overview about health insurance before I get into this regulations. I'll start off by saying not something that you don't know, but it's just in the context that I have to talk about this. First is health insurance as an independent segment has grown, and the recognition of the fact that health insurance has grown into an independent segment can be seen by the fact that this health insurance business has now been incorporated as one of the definitions which is there in the Insurance Act when the Act was amended in 2014 through the Insurance Laws Amendment Ordinance. Otherwise, health insurance constitutes one of the elements in miscellaneous insurance. And even now, I don't think there is any change in position insofar as health insurance is concerned. It is still a part of miscellaneous insurance. But since special companies have been put in place to deal with health insurance products and also given the importance of the scope of health insurance business has been defined in the Insurance Act. Now I will start my presentation and take you through the regulations, and there are two schedules which are there to these regulations which will talk about portability and about health and life combi products. I have not discussed them I have not incorporated the them in the PowerPoint presentation, but I will go through the aspects which are there in that two schedules also. So please confirm when you are able to see my presentation. Okay. 1 minute. So are you able to see the PowerPoint?
Yes.
Yeah,
quite clear.
Yes. So I will start off with this. As I was indicating, it was and is a segment of miscellaneous insurance. And the definition of health insurance business was inserted by the Insurance Laws Amendment Act 2015. So section 26C defines health insurance business as meaning effecting of contracts which provide for sickness benefits or medical, surgical or hospital expense benefits, whether inpatient or outpatient, travel cover and personal accident cover. So basically whether inpatient or outpatient it's a qualifying thing as far as the sickness benefits or medical and other things are concerned. And travel cover is something which is independent. So, but there is no comma or punctuation in that, because of which I have incorporated this, and I wanted to show you that it talks about health insurance business means travel cover also. So domestic or overseas travel policies are also part of the health insurance business. Then personal accident cover also can be a part of the health insurance business. Then the regulations that are presently in force are IRDA Health Insurance Regulations 2016. There have been some modifications which have been brought into these regulations in 2019. November 19th was the day from where on which those changes were notified. But presently what you have, these regulations are effective from 18th July 2016. Then these are issued exercising the powers under Section 114A of the Insurance Act, under which IRDA has the power to make regulations. Then under the Insurance Act, there are two sections under which powers are exercised. One is Section 14, which talks about the duties, powers and functions of the authority. Then Section 26 is the general power that is given to IRDA to make regulations. And as usual, any regulation that IRDA issues exercising Section 26 powers have to be done in consultation with the Insurance Advisory Committee. So this particular health insurance regulations have there are 6 chapters to it, and there are 2 schedules in it. There are 3 schedules in fact, but 2 schedules are material. The third one is something which is almost like your power to frame regulations only. So there is first chapter talks about general aspects. One, what is the applicability of these regulations, and then what certain definitions, etc. Then chapter 2 talks about provisions relating to health insurance products, filing related aspects, etc. Then chapter 3 talks about general provisions relating to health insurance. Chapter 4 talks about administration of health insurance policies. So here the TPA, the network provider, those items, claim management, then issuance of policies, the policy document, terms, etc. All those aspects form a part of chapter 4. Then chapter 5 talks about submission of returns to authority. Then chapter 6 talks about repeal and savings as well as removal of difficulties in implementation of the regulations. Schedule 1 talks about portability of health insurance. In fact, prior to 2019, I think this was a part of one of the regulations itself. There also there was a mention of portability, but now this portability is separate, and it has been incorporated in Schedule 1. 2 talks about this health plus life combi products. But as far as this health and life combi products, this is basically intended to have the benefit of having a health product and a life product coming together. But in every other sense, right from the product filing to the distribution of this, etc., and the features, claim handling, servicing, etc., all these are done by the health product service provider and the life product service provider or the insurer. So it is basically a combination of product, which is like what is it? In chemistry, we will have terminologies like a compound and a mixture. What is the? I hope you understand the difference between compound and mixture. What is the difference between a compound and a mixture? Anybody?
A compound is a homogeneous mixture.
That chemistry, but compound comes out of chemical reaction. Whereas the mixture is just a mixture. It is putting 2-3 things together,
exactly,
and without any reaction.
Exactly. So exactly, this combi product is merely a mixture of a life insurance and a health insurance product issued by a life insurer. So health insurance product issued by a general insurer or a standalone health insurer. So technically speaking, there is no merger of features, etc. So it's basically one product of a life insurance company and one product of a general insurance company. There has to be an agreement between these two people to offer their products together as a combi product. The health insurance product will be subject to the product filing requirements, etc. As far as health insurance is concerned, the life insurance product will be as far as the life insurance product filing requirements, depending upon whether it is a linked product or a non-linked product. So, and the service and an intermediary who is not, this agreement between an insurer and life insurer and a general or a health insurer can be independent of any other arrangements. And imagine that there is a intermediary which has one life insurer and one general insurer. So if the combination of it is different, he cannot distribute this combi product. So that is the kind of thing. So suppose I have a agent who is dealing with SBI life and an SBI general, but there is a combi life product and health product which is of SBI life and maybe ICICI what is it, Lombard. Then the agent or the intermediary who has the license to deal with these two cannot distribute the product. So in all senses of the term, this health and life combi product is a mixture. It's not a compound. So that is, you see the schedule which talks about this, you will find that chain flowing where the premium can be paid by one. It will be a combination of premium which will be there for the health product as well as the life product. Underwriting will be separate, health product and life product, those which are applicable for them. Then servicing of the product will be done together. Premium will be received by one but distributed to the other person. Then claim handling will be handled by the respective claim section. This is how the entire product travels. So that is what is the nature of this combi product, and that is what is coming out in this schedule 2. But in schedule 3 there is something which I was always indicating that it is not appropriate. It consists of a listing of regulations and subject matters in respect of which IRDA may specify by circulars, guidelines or instructions as referred to in the regulations. So generally what happens in the case of an act, I don't know whether Mr. Amandeep Singh has not joined. As far as Act and subordinate legislation is concerned, we need to understand a few things. See, the Act contains provisions, like I was talking about surveyors the other day. You have a surveyor who is dealing with, you have a provision relating to surveyors in section 64 UM. What should be the qualifications, etc. that are supposed to be there for surveyors? What is the code of conduct and what is the amount for which you want to prescribe the requirement of a surveyor or loss assessor? These are matters which you would want to take to regulation. Okay. And the power to frame regulations relating to matters in 64 UM is provided for in section 114A of the Insurance Act. Okay. So now the requirement of laying of rules and regulations is that you frame the regulations, you notify the regulations, and then this regulation has to be placed before both houses of the parliament. And when we say regulation, you cannot say that in the regulation I will indicate further that these items I will specify through circulars instructions. And I am not going to bring the whole thing together and make it a part of the regulations. So what am I doing? The power for me is to delegated to make regulations. But in these regulations, I am carving out certain items and then say that I am going to specify items here through circulars, instructions and guidelines, and don't make it a part or at least issue along with the regulations. It doesn't go in the spirit of delegated legislation. So this is something which I tried to tell them, but still I was not objecting to this listing out of items where you could have details coming out. But if you see any of the items that are there, like your Companies Act advertisement related aspects or anything that you find in Companies Act rules that are supposed to be made, you will have a 100-page document or a 200-page document having various formats, returns, etc. But the entire thing will form a part of rules, and that will be the one which will be notified and issued. But here you have instance where the regulations are framed, but there are portions within the regulations which are not part of the regulations which are notified, and they will be issued through other things. And the requirement of notification which is there in the regulations does not come into play. Ideally speaking, those areas which are listed in Schedule 3 here, saying that listing of regulations and subject matters, these should also be notified, and only then the requirement should be deemed to be completed. So I don't know when or how we will be in a position to get through this aspect to IRDA, or maybe the Committee on Subordinate Legislation, if at all it takes up this issue, it will find that this is not an appropriate mechanism of coming out with subordinate regulation. So am I clear as far as this is concerned? Anyone who is there are advocates also in this group, no? Or persons who have been in the legal side of insurance. Anyone has any idea? Smita, madam, maybe you can throw some light because you are an advocate and you are aware of the administrative law principles, etc. Anybody? Nobody? No takers? Did others in the group understand what I am trying to point out here?
Yes, sir. Noted.
Yes.
Yeah.
Doesn't warrant. It doesn't warrant, no, section 3.
Yes.
Briefly.
So you are supposed to be putting the whole bunch as regulation. You cannot say that I will put only the skeleton in regulation and then say that the blood and flesh in that regulation I will come out through some other circular guideline or instruction. So the entire thing should be put together and then it should be issued, and that is what will make it proper subordinate legislation. So this is another small nuance that I wanted to bring to your notice, and this can happen. This can be brought to the fore provided there is any dispute that will come about and the matter goes where IRDA's regulations are challenged. At that stage, again, you could have this coming up, but who will challenge and what will be the occasion where that gets challenged is something that we'll have to wait for. But till then, this regulations and the mode of operation of these regulations in this manner will continue. Okay, so shall I go ahead? So shall I go ahead?
Yes, sir.
Yes, sir.
Sir, please go ahead, sir. Please go ahead. Please go ahead, sir.
Yes. Thank you. So the first is about short title, commencement, etc. So the IRDA health regulations 2016 actually, this is not 2013. Then these are effective from the date of publication in the Gazette. 18 July is the date from where it was effective. Then unless otherwise provided by the regulations are not deemed to invalidate health insurance contracts entered into prior to the commencement coming into force of these regulations. That means already whatever products are there and whatever insurance policies are issued and are in force, they will continue to be in force. And the regulations, whatever changes are brought about, these will not invalidate or make or negate the health insurance contracts that are already in existence and which are in circulation. Then regulations are applicable to all registered life insurers, general insurers and health insurers conducting health insurance business as defined under the Act. And it is also applicable to the third-party administrators wherever it is mentioned. In terms of policy servicing, pre-authorization, etc., there are certain provisions which are there in these regulations which relate to third-party administrators, etc. So wherever they are informed, these regulations will be applicable to them also, is what the section says. Then there are certain definitions which are here. So one of the important definition is a health services agreement. So this is basically an agreement which is also referred to in the IRDA TPA health services regulations, which we will be discussing the day after tomorrow. There is a mention of Ayurvedic, this Ayush treatment. So basically medical and or hospitalization treatments given under Ayurveda, Yoga, then naturopathy, Unani, Siddha and homeopathy systems. Any of these systems will be treated as Ayush treatment, and the regulations say explicitly that insurers should endeavor to promote Ayush treatment also. Then there is a definition about break-in policy. This becomes important for the purpose of continuance of benefit or continuance of the policy and the renewal of the policies. So where the break is more than 30 days after the renewal is due, then there is deemed to be a break-in policy, and renewal can happen only within this time. but for the period where there is a for the 30 days period which is permitted, you will not have a cover that is available. Then cashless facility, it is basically a facility extended by insurer or TPA on behalf of insurer, where payment of cost of treatment is directly made to network provider by the insurance, and here it is to the extent of pre-authorization. Then the next provision is product filing guidelines, basically those guidelines which IRDAI has issued for clearing of products and for, which are under the health insurance business. Then health insurance business, I already told that it is as defined in section 260 of the Insurance Act. Then health plus life combi products is, these are basically products which offer combinations of life insurance cover offered by life insurers and health insurance cover offered by a general or health insurers. Then pilot products are basically those which are close-ended products. That is, they are not available continuously. They will be there only for a certain period of time. And what are these products basically intended for? They're intended to provide scope for innovation and also to provide covers to those who are generally excluded in the current products that are there. Say maybe someone who is beyond 65 years. I want to give a product for them because the average life expectancy has increased and there is not much of risk in providing a health insurance product which is of 3 years tenure for someone who is starting to take health insurance at 68. So those kind of products and maybe those exclusions that are there, I want to provide a specific cover for that and see how it works. So for those kind of products, they can health insurers and general insurers can come out with something called pilot products. So these products will be 1 year policy term and they will be applicable only for 5 years from the date of launch. But after 5 years, whether it will be continued or it will be discontinued, it will depend upon the experience that they gain based on the administration of these pilot products. Then senior citizen, basically a person of 60 or more years of age as on the date of commencement or renewal of a policy. Then the definition of health services by TPA and network provider, these are as defined in the TPA regulations. Then anything which is not defined here, but which is defined elsewhere, the meaning that is there in that will be applicable. Then section 3 of chapter talks about registration and scope of health insurance business. So the health insurance products may be offered by entities with a valid registration under the IRDAI's registration guidelines to carry on, not top carry on, but to carry on life insurance and general insurance or health insurance. What are the kind of policies which life insurance companies can issue? They are basically long-term products which are in the nature of benefit products. They are not supposed to be indemnity-based products. So the life insurance products are basically 5 years and more, and the premium of these products can be unchanged at least for a block of 3 years. And after 3 years, they can be reviewed, and it should be for the reviewed and renewed one will be applicable for 3 more years. But during the period of 3 years, there cannot be any alteration. So group or individual policies also, but should not be indemnity based products. But if there are any indemnity based products, they have to be withdrawn within 1 year of the introduction of these policies. Then no single premium health insurance product in ULIP platform should be provided. That is, you could have single premium products, but they should not be unit linked products. Then in case of general and health insurance, these are basically they can issue policies of minimum 1 year and maximum of 3 years. And during those 3 years, the premium should not be changed. Then group health policies by an insurer. Here the term of 1 year. However, if it is a group health policy which is credit linked, the period could be a loan period. However, it cannot be more than 5 years. The general insurers and health insurers can also offer other kinds of products in the health insurance domain. That is credit linked group accident policies. Here also the loan period, it could be after the loan period or not more than 5 years. They could issue group personal accident policies for a term less than 1 year for specific events. So where there are specific events that are happening, they can issue for less than 1 year, whether it is personal accident policy or travel and individual personal accident cover also, they can give for a period less than 1 year. In addition to it, a general or a health insurance company can offer overseas or domestic travel insurance policies. Then life insurers also can offer group health policies, but the nature of these policies should be indemnity, it should be benefit based only. Then product filing procedure. So as usual, we have a use and file system which is there. So no insurance product or its modification or a revision of that product by an insurer can be done unless it is filed with IRDA. Then health insurance products of life insurers. In these cases, depending upon the nature of the product, the regulations of IRDA insofar as linked products or non-linked product regulations, that will also apply where relating to health products. So there are certain portions in these regulations which are dealing with health products by life insurance companies. So those provisions also will apply for these policies. Then withdrawal of a product. So withdrawal of health insurance products is subject to guidelines issued by IRDA. Then for non-indemnity products of life insurance, they are not permitted after the regulations. So in these cases, the product can be closed with a prospective date of closure not more than 3 months after the notification. So they will have to indicate that I am going to close these kind of products and make an announcement of that. But all the existing policy holders, their policies will continue till the time that the policies will expire. Then the review of health insurance products is supposed to be carried out by an appointed actuary. So all particulars of health insurance product after its introduction, revision or modification has to be done by an appointed actuary at least once a year. And on this review, if they find that there is any product which is unviable or deficient, then the appointed actuary may revise the product, and this revised product will have to be filed under the product filing guidelines for revision. In fact, they have only indicated revision, but you can drop the products also. So deletion of products also you can do if you don't find them to be financially viable. Then regulation 7 talks about group insurance. So basically the principle that is there is you cannot have a group exclusively for the purpose of taking insurance. That is the principle which is reiterated here. So no group health insurance policy can be issued where group is found mainly for availing insurance. Then there should be a clearly evident relationship between the members of the group and the policy holder. That is the person who is taking the group policy and the members of that group policy. Then they cannot say that for this purpose I will have one group size and for the other purpose I will have another. So the size of issuance of a group policy should be as determined by an insurer and not less than 7. But whatever size they decide upon, it should be the same minimum group size for all group policies that they are going to issue.
Can I butt in?
Yes, sir.
That aspect which we are talking about, that a group should not be treated for taking an insurance policy.
Yes, sir.
There's an interesting take on that. My company, a New India company, that issued policies were especially taken for groups which were created for senior citizens and all who had some problem or other. And group was specifically created because those people had to undergo various operations for knee replacement and this and that. So that policy was taken especially for that, and all claims were being paid. And it was actually started, the group was started by one ex senior person from the public sector only. And there was a lot of complaints that this claim is not paid, this claim is not paid. Then I found out that this group has been created only for taking insurance. And this group was like of senior citizens only, and all of them had problems. So there are a lot of claims. So then I took up the matter with my senior management, and they said this policy has to be immediately cancelled. You cannot have a policy. So there was a lot of people involved because this person, he retired from his senior position, who actually was running the whole show, and he was kind of touched the CMDs and all that. So he put a lot of pressure, and he ultimately came to me and he said, "Why are you saying this?" I said, see, you're not the authorized person. I cannot talk to you. You have no status in this matter. I'll talk to the people who have taken the policy. And he was running the show, but the policy was not in his name. And I was able to get all the policies cancelled. And I said that, I mean, you go to court, then I'll see you at court also, because this is something which is doing illegally. So I just thought I will create this thing, because what you're saying is actually happening, especially in health, which is happening. Your mic is on.
In fact, I was reminded of that when you had suggested that we will have a policy for the people who have got themselves registered for this, what is it? Insurance arbitration. So at that time, I was wondering whether that is something, some group which can qualify for the purpose of taking a group insurance policy. So
yeah, because this is a different group. This is not created.
Yes. But then who will be the policy holder there?
Institute.
Yes. So yes. So we can probably, what happened to that policy taking, sir? We have given it up?
No. There's just one batch, not the second batch. Let's hope they also.
Okay. Okay, sir.
And last batch we had two people from UTI and National. I mean, this Manohar. I had them send him a message, and I had sent to Sri Devi also. They have not yet responded.
There have been
whether they will be willing to give such a policy.
Yes, sir. Ajit Kumar, sir, you were saying something?
No, what I am saying, there have been instances where such policies have been taken, but only for the sake of taking insurance.
Correct.
So such things have been happening. Like if I am not offending others, then there is like a Jain group. Jain group has been a.
Your voice is breaking, sir. Okay, got disconnected.
Yeah, again is back.
Sir, yes. Sir, you got disconnected, sir. Ajit, sir.
No, yeah.
Again, there's some internet-related problem, I suppose.
Actually, this problem, they may go for arbitration also, you know. So you have got to understand the status. First of all, their contract is illegal.
Yes, sir. Sir, Wahab, sir, your voice is coming with an echo.
Yeah, I know. I'm also getting the echo.
So, what is it? Like the song, like it's sounding like Navrang's song.
I'll switch off and I'll join it. Maybe it will.
Okay. Yes, sir. Ajit, sir. Again, it got dropped. Unstable network. Ajit, sir. Again, you're coming and going. Ajit, sir, some serious problem with your network or what? You're coming in and going out, again gone. So shall I'll continue. Maybe when he's having a stable network, we'll be in a position to interact. Okay. Yes. So then underwriting, all insurers, health insurers and life insurers, etc. should have a health insurance underwriting policy. And this policy is supposed to be periodically reviewed. And what should it keep itself in tune with? One, changes in medical field and health insurance business, changes in the health insurance business theme. Then the policy should cover, the underwriting policy should cover the criteria not only for standard lives but also non-standard lives. And the objective underwriting parameters for acceptance of risk based on risk categorization should be the crux of this underwriting policy. Then any acceptance or on modified terms or on in which cases it is supposed to be denied. Any acceptance or modification or acceptance on modified terms or denial of insurance should be based on this policy only, and denial should be at the last resort. So this is very specifically stated that health insurers and the health insurance policy should not be denied, and you should use denial only as a last resort, and once you deny, the denial has to be communicated in writing with the reasons. This is as far as the underwriting part is concerned. Then general insurers and health insurers may devise mechanisms or incentives. So what are these mechanisms and incentives that they can devise? Are incentives for early entry, because he will be anyhow coming early, then the likelihood of getting claims probably is less, so there has to be some incentive for him. Then continued renewal, then favorable claim experience, then preventive and wellness habits. So there are some, Aditya Birla is coming out. I think other insurers are also probably coming out with products, but I know of it because one of my friends is there in that company and he told me that you can take this when I was talking about this walking. So Aditya Birla has a mechanism where if you are depending upon the number of steps that you take, it is providing you a a rebate in the premium for on renewal. So you will have to see about for 300 days, if you are walking 9,000 steps in a day, you may get up to 50% of premium reduction. So these are some of the things that they can incorporate to build to incentivize good aspects in a policy, and the good aspects could be early entry, then renewal, or good habits that people have. So that is something which they will have to incorporate in the underwriting policy. Then disclose, they not only have to have them, but they have to disclose these upfront in the prospectus and in the policy document. Then these have to be, they have to comply with the norms under the product filing procedure guidelines. Then the insured should be informed about the loading above premium as filed and approved. So if there is a loading that is supposed to be incorporated for a person, then the insured has to be informed about it. And then only if he gives a specific consent for the loading before the issuance of policy, then he should issue. If the insured says that I am not accepting this, then the policy should not be renewed for him. So this is an important aspect, and all these are incorporated in the underwriting. Then proposal form. So they have to devise a proposal form for seeking health insurance, and all the details that are supposed to be captured for underwriting as per the board approved policies have to be incorporated in the proposal form, because only on satisfying of those requirements will you be in a position to grant him the insurance. Then information collected should not be parted with third parties. And this is basically a data confidentiality kind of a thing that is incorporated. Or you shouldn't be doing cross-selling of information. So except as per law or for underwriting or claim settlement or for the purposes specified by IRDAI. So these are the only permissible areas where you can disclose the information that is collected in the proposal form. Then not include conditions for prospect to part with information submitted. So you cannot say that in the contract, I will say that I can part with this information and then say that the prospect has consented for this disclosure of information, so I will go ahead and disclose. So you cannot do that, and the only permissible mechanisms of information disclosure are those which are provided in these regulations, and they cannot be negated by incorporation of a clause in the policy or in the proposal form. Then the principles of pricing. So basically premium to be decided based on the age and other relevant factors as applicable. In case of family floater, the incidence of rates of the family members have to be considered to decide on the pricing. Then change in premium, ordinarily it should not be before 3 years after filing. So you could have in extraordinary circumstances a change in premium, but it should be only after approval. Then afterwards it can be revised based on the experience. Then changed rate not to be changed for 1 year after revision. So you cannot have after you get the change, and this change should be applicable for 1 year. Before 1 year, you cannot again go and review and change. Then unchanged premium rate should be there for all group policies for term of the policy. Then as far as individual and family floater policies of general insurers and health insurance policies, 1 year for annual renewable policies and 3 years for other policies. In case of life insurance products, as I told you earlier, this is a reiteration that the change can be in blocks of 3 years. Then the change in premium will be applicable only prospectively and from the date of renewal of the policies, and they cannot be made retrospectively applicable. Then designing of health insurance policies. So you could have covers for specific age or gender groups. You could have covers which are applicable for different age groups. Then you could have covers where the treatment is in hospitals across the country. Then you could have treatment in specific hospitals only. And I would like to stop here to find out what is the sense of this. Then you could have covers for treatment in specific geographies, like maybe northwest, northeast, south, Delhi, etc. So something like that. Then the specifications to be disclosed clearly upfront in the prospectus and during the sale process. Whether there are any specificities to a product that has to be disclosed in the prospect as well as during the sale process. Then no benefit or service to be offered without an insurance element. So along with the insurance policy, you cannot give any benefit which is not a contingent benefit having an insurance implication. So here I will cover this, complete this, and then get on to the my question that is there, and I'll pause also. In designing of health insurance projects, as I told, pilot products are also provided for, and they are intended for innovation, and they can be offered only by general and life insurers for general and health insurers for 1 year, and they are close-ended for a maximum of 5 years. And after 5 years, it should be either a regular product or a withdrawn product with the option to migrate to another product subject to portability condition. So basically, what should be the fate of this product is something which has to be decided based on the claims experience that is there. So the appointed actuary is supposed to review the products, and these products are supposed to be reviewed from the perspective of their continuance. And once the 5-year period is over, they will have to take a call whether to make it a regular product or to withdraw the product. But the fact that this is a pilot product is also supposed to be informed by the titling of the product, and also it should be made known to the customer that this is a pilot product and there could be a change which could happen 5 years after the issue of the product. Then the insurer not to compel insured to migrate to other health insurance product. In fact, we were having complaints of this nature, and the complaints sometimes were in respect of the product being withdrawn. There is nothing wrong in asking for migration when the product which you are holding is withdrawn. But people were having an objection saying that the old product was at a particular rate and the new product, even in spite of better features and coverage, is having a very high premium. So I don't want to migrate to this. So, but we can't do anything about it because the product itself will not be in existence. And here migration is something which is automatic. Then if the product is withdrawn, offer migration subject to portability. Then dissemination of product information and particulars of all products should be done on the website. Then to facilitate the customers, IRDA proposes the standard health products. So I told you about this Sanjeevani, Arogya Sanjeevani product. Then there are other products like Corona, Kavach, and those products. So those standard health products, they should also be offered as per the guidelines of IRDA. Then any exclusions in product or policies should be as per the IRDA guidelines, and the features, etc., have to be incorporated on the website. So here I would like to stop and seek some clarification from the persons who are in the field. Yeah. Am I online? Okay. So here it is indicated that you could have a treatment in specific hospitals provided morbidity rates used are representative, and even in specific geographies where they have indicated that provided morbidity rates used are representative. So can anyone give me a sense of what this means? Whoever is in the insurance and who have what is it, health insurance policies, etc., you have administered, what does it mean by this, where it is representative? So an insurance company.
Slide, please. Slide, please.
Yes, I'll just show it. So they could offer covers for treatment in specific hospitals only. Like I could say that I will give this treatment only in Apollo, but the rate that I have to adopt or use has to be different. And what is this? That is where they are indicating that provided morbidity rates used are representative. What does this mean?
No one from life insurance. This is actually used in life insurance morbidity.
But what is the basis for health insurance? There also it is morbidity only, no?
Yeah.
Mortality basically is in life insurance.
Yeah, and morbidity also they are using.
Correct, because they are benefit-based policies, no?
Yeah.
Here, when
actually, I'll tell you, in life insurance for a particular policy, they couldn't get that kind of data from India, so they borrowed the data from South Africa because they found that there there is similarity in education and in other aspects. So they thought that those data can be, borrowed and used for in the Indian context. So actually in health context also we have to, this morbidity thing is very useful, but we are not exactly, today all the health insurance policies are basically ये जो कहते हैं ना चाट मसाला जो होता है ना, they are chaat masalas actually.
But then they will go very wrong in terms of pricing if they are not using the frequency of diseases, etc. And what is the
They are going wrong. They are going wrong all the time. Now you tell me how many health insurance policies are in profit. These private companies, since they are, they are not exactly paying all the claims, so they declare that they are in profit. But if you look at from an actual perspective, most of these health insurance policies are vanilla products. They are based on that Mediclaim policy which came in 1986. And that policy more or less remains the same. Only thing is they have added so many, features to it, which they call benefits. So to get a benefit, you have to fall sick. So that word benefit itself is very wrong, actually.
Okay.
You have to fall sick to get a benefit. That is something which I don't understand. But anyway, they use the word benefit. So they have most of the policies today are basically the same hospitalization, but they have added a lot of features to that, which are basically based on a simple aspect, the risk of falling sick. So risk is still sickness. The risk is still sickness.
Have anyone seen the policy which is specifically for a particular jurisdiction, a geographical location, or for a specific hospital group?
No, sir. No insurer is issuing with a specific hospital and specific area, but while issuing the policy, if the treatment is to be taken in a metropolitan city, the rate will be higher. And if it is in tier 2 city, the rate will be lesser. If it is in tier 3 city, the rate is lower. So like that, I have seen the policy, but not specifically to restricted to one hospital like Apollo Hospital, and restricted only to Mumbai, restricted only to Delhi. No such policy I have not seen ever, sir. Okay. Maybe some I don't know, some private health insurers may come up with such product.
Okay.
But I have not seen.
Okay, thank you, sir.
Actually, at this stage, we are not exactly going into the design of the product. Dr. Mallikarjun is talking from the regulation point of view. But one thing which I just want to, throw it to you for discussion is, in my opinion, health insurance policies cannot be for 1 year. There has to be long-term, lifetime policies. So, this is something which I'd like to discuss when we have the underwriting classes. But just wanting to have your feedback subsequently, not now. that health insurance policies cannot be 1 year policy. That creates a lot of problem in designing the policy. So health insurance policies has to go along with the life of the person. So it should be, I mean, like basically a long-term policy, just like a life insurance policy. That is something which I have been talking since. I mean, health insurance has been an area of my interest for me. But today I am just stating this now because subsequently when we will be looking at underwriting of health insurance, at that time we will again talk on this. Yeah, please, Malika.
Okay, sir.
One thing I want to say,
Yes, yes.
this renewability in health insurance is a lifetime. So you cannot exit a client. So
yes,
that way, even though they are annual policies, health insurance are annual policies, but as per the regulation, renewal has to be allowed every year. So
yes.
it is a lifetime. So it is as good as a long-term policy, I would
So that's
say.
the reason why, see, what you have in a life insurance policy is something which is called as a average premium or something. There is a terminology which is used for it. What is it?
See, why I'm saying that, I mean, what you are saying is very correct.
Yes.
Yeah. What you are saying is very correct, that there is a provision to renew the policy, and generally insurance companies are not supposed to,
Refuse.
not
Yes.
renew it. But then, because it remains a 1 year policy only, so the moment the policy is renewed and there is a gap, and the gap, if that delay is not condoned, then pre-existing disease comes into picture. So basically, the biggest problem for a 1 year policy is the pre-existing diseases. Of course, subsequently they say after 4 years it will not be there and all that, but there are other problems also. So basically, why I am saying this thing, that health insurance should be a lifetime policy. If you remember, we had at one time this Bhavishya Arog policy. I hope you all remember this Bhavishya Arog policy.
It's a very good policy.
So Bhavishya Arog policy was a lifetime policy, but it was supposed to be where the premium was supposed to be paid till you are in service, and after retirement the policy was supposed to go into operation, and there was no date for that ending of that policy. Now that policy we had designed 20 years, 25 years back, a very futuristic policy, one of the best policies we had designed. But unfortunately, we didn't have, we couldn't manage the data because at that time we didn't have this IT and all that thing. IT came subsequently, but still we could not manage the data. So that policy ultimately we have put it on the back burner. But if you look at health insurance, it is something which, it defies logic that a person, has a health insurance which is related to his life for 1 year only, then again he has to renew it. In life insurance, see, the renewal is, there is this thing, there are, of course, safeguards there that if a person delays, then he has to pay a certain kind of penalty, but it is renewed. But in health insurance, it doesn't happen that way. Even if the insurance company is allowed for the renewal, but if the person delays it beyond a certain limit, especially after 1 month, then all these pre-existing things will come into picture. But anyway, these are things we can discuss subsequently. Right now, the regulations which Dr. Malika Arjun are saying, we have to understand it from this context, that tomorrow you have a situation where there is an arbitration on a particular aspect. And if you are not aware of the regulation or the rule, then you may not be able to take a right decision in the matter.
Yes,
yeah,
sir.
please.
Yes, thank you. Designing, this is the one. Then entry age and exit age, it's pretty simple that the entry age of at least 65 years should be there, except in case of pilot products. So basically in a pilot product, you could have an entry age which could be beyond 65 years also, because these pilot products are basically intended to deal with those which are otherwise not covered by your conventional products or excluded in the conventional products, or it is totally an innovative kind of a product. So that's, for that reason you could have an entry age beyond 65 years also. And once the proposal is accepted and policy issued, as Madam was indicating, renewed without break, then renewal cannot be refused. And the exception here is travel insurance, personal accident, and pilot products. So, considering that they are going to be, and one more small issue in relation to health insurance products is in case of life insurance, you have a level premium kind of a kind. But here there are different dimensions which are there, because of which having level premium will be very difficult. And probably that is the reason why they want a review of the product actuarially done every year. And then they don't want products to be issued for more than 3 years. So it's probably once this hospital pricing, then the insurance, this kind of nexus, if it is taken off and there is some standardization in prices, then probably we could have a long-term product, but that it's far-fetched, and we will discuss it subsequently. Not the time for me, and I am not the person to be discussing about that. Then renewal of health policies. So health policies other than travel and PA policies are ordinarily renewable, except, so the exceptions are where there is a fraud or there is a moral hazard or misrepresentation or non-cooperation by the insured. In these instances, the renewal of the policy of a health policy can be refused. Then renewal not to be denied on the ground of paying claim in previous year. So this is not a ground that is available for denial. However, it can be a ground because where you are taking a benefit policy, and once the benefit is paid because of the what does it say, maybe a critical illness policy, you've taken the benefit, then automatically you will become disqualified for renewal of the policy. So that kind of thing is there, but otherwise because of a claim in the previous year, you cannot deny renewal of a health policy. Then condone delay in renewal and not treat as a break, but without coverage. So where there is a delay in payment of premium beyond the renewal due date, you give them a 30-day period for that. But one thing, premium should not be taken 90 days before it falls due. So just because you may forget, you can't say that 3 months before the policy becomes due, I will make the payment of renewal premium. That cannot be done. So in this way, 30 days and grace period of sorts is available for renewal. Then promotion material and policy document to clearly indicate about termination of policy on payment of benefits in case of critical illness benefit policies. So this should be very clearly told to people, and this should be a part while they are underwriting also, no? Then free look period. New individual health insurance policies by life, general and health insurers. There is a free look period of 15 days from the date of receipt of policy. Then policies with tenure of less than 1 year, like specific policies for a particular period, for those policies you don't have free look period. Otherwise, normal policies, new policies, you have 15-day free look period. And what are the deductions that are permitted from the refund of premium? Expenses for medical exam and stamp duty, then proportionate risk premium for the risk or part of risk cover provided. And in case it's a linked policy, then the insurer will repurchase the units at the price on the date of return of the policy. So this is generally the free look provision that is there in the policyholder protection regulation for life insurance also. Then the provision 15, regulation 15 is about pre-insurance health checkup. So the cost of health checkup to be a part of expenses allowed at the time of product filing. So where the products of 1 year term or less, if the pre-insurance health checkup is incurred by the insured, not less than 50% of the cost is to be borne by the insurer once the proposal is accepted, except in case of a travel insurer. So the liability, the insurer should bear at least 50% of the cost of the pre-insurance health checkup. Then insurer to maintain list of medical insurers and institutions. Medical institutes and institutions from where the checkup can be conducted. So they will indicate that I will take the medical checkup only in these institutions. So they will have to give a list of this, and they will also indicate the fee that has to be paid by the prospect for getting the pre-insurance health checkup. Then cumulative bonus. So the quantum of cumulative bonus and the mechanism has to be stated explicitly in the prospectus and policy. Then if a claim is made in 1 year, the bonus accrued during the previous year, whatever rate it is, at the same rate it has to be reduced. Then migration. So general and health insurers offering indemnity based products can offer migration to suitable alternative health insurance products. And in what instances can they provide migration? At the time of modification or withdrawal of a health insurance product. Then at the time of moving from specific age group or out of family floater policy at the exit age. So at that particular point of time, you want to be given an individual policy rather than a family policy. Then you will have to you can be moved to another health insurance product. Then in case of pilot products, on its withdrawal after the 5-year period, then automatically they have to get themselves tagged to some other health insurance product. Then all general and health insurance offered health insurance policies should also offer portability in accordance with the guidelines that are provided for, and even the migration and portability should be as per the guidelines of IRDA. The portability aspects are discussed in Schedule 1. Then Ayush coverage. So these days Ayush is more important than your allopathy, because people say that allopathy has a lot of problems. So that's the reason why all insurers may endeavor to provide coverage for one or more systems of Ayush treatment, provided it is undergone in hospitals or healthcare facilities subject to IRDA guidelines. So this Panchakarma treatment, etc., all those things are possible, and the insurers may provide coverage through these. Maybe Kotakal Arya Vaidyasala, they can go and get themselves treated. It could be something which could be reimbursed or paid as per the insurance policies. Then wellness and preventive aspects also. So to promote good habits, insurers may endeavor to promote wellness among policyholders of health insurance as per the IRDA guidelines. So again, this is another thing which they can issue as guidelines. Then two things that have been done by IRDA which has been appreciated well is in terms of giving standard definitions and also standard nomenclatures and procedures. So very elaborate guidelines have been issued. So the reference to those is what is brought about here. So phrases and terms used in health insurance policies of life, general and health insurers shall carry the meaning as attached to them in standard definitions issued by IRDA. Then standard nomenclature and procedures. So the nomenclature and procedures incorporated in policies offering critical illness covers shall be as specified by IRDA. Then optional coverage for certain items. So the list of generally excluded items that may be optionally covered to be specified by IRDA through guidelines. So what are those items which are specifically excluded, and what are those items which you can grant subject to the rates that are specified for that, or the terms and conditions that can be devised by the insurers. In respect of hospitalization indemnity policies, they have to indicate what are those they will be providing as optional cover and incorporate them in at the time of product filing. Then product specific exclusions, they are supposed to be incorporated in the prospectus and policy, and also they are supposed to be disclosed in the insurer's website. And where they are not included, the copy of this has to be furnished to the policyholders, so that information, the utmost good faith principle is followed in respect of this. Then insurers may offer cover for these items and mention it in the policy. So this optionally excluded or excluded ones, they have to be disclosed, and they have to be incorporated in the website. They have to be informed to the policyholder, and where they are providing this as additional cover, they will have to incorporate that and offer them. Then special provision for senior citizens. So basically the pricing of the products for senior citizens should be fair, justified, transparent, and should be disclosed upfront. And also to facilitate the claim handling and grievance handling of policies to senior citizens, they need to put in place a separate channel for addressing them. Then this is the thing that Wahab sir was indicating about the principle of contribution being given a go by in respect of health insurance policies. So this particular clause, I think all of you can go through. And if my understanding about this is wrong, what is it? I would be glad if someone comes and corrects my understanding about this. I have tried to summarize it here, but I don't claim that I have grasped the whole thing well. But my personal feeling is there are certain areas where there is a departure that is made. But because IRDA is exercising its power to frame regulations, exercising the powers under the Act, this will have the force of law. First thing, where the policies are with fixed benefits. So it's being a benefit policy, you have multiple policies also. The benefit that is paid by one does not affect the benefit to be claimed from the other. So you can claim from all. Then multiple policies to indemnify treatment costs. So here he can pick which insurer he want to take the claim from, and if he chooses that particular policy, the insurer will have to settle the claim if it is within the limits as per the policy terms. So this is the first thing. So I have 3 insurers and I find that there is one insurer from whom I can claim. So I can make him the person to be paying the amount and as per the policy terms. But if there are certain items which are inadmissible in the claim that has been settled by him, or there are certain items that are disallowed, for the remaining amount of the claim, I can go and claim it from other insurers. Maybe one insurer or the other insurer, and then he will have to deal with it and settle the claim as per the policy and the terms that have been issued by him. So this is the second thing. Then suppose it exceeds the sum insured on one policy. Then here again the insured can choose any insurer to claim the balance amount. So here, in case of normal principle of contribution, you take policies from different people, then in proportion to the premium that is subscribed to, you will have to make contribution. That is the principle of contribution that is there. But here what you can do is you can choose. So I will pick one person first. Then if there is something wrong or missing in that policy, then I will go and claim the remaining amount from the second. Or if it is exceeding the amount, then I will go to other insurer. So you could have this pick and choose of insurers. Then if insurer chose cover for the same risk on indemnity basis from more than one insurer, the insured is indemnified only for hospitalization costs as per the terms of chosen policy. So this is something, other things I am able to understand, but this is the last element of it which I am not very comfortable with. So which I think is that if there are 2 policies which are in the nature of indemnity policies that I am having, say ICICI Lombard or this, then I will have to take the cost of hospitalization as per one of the policies only. So I cannot say that I have taken a policy of ICICI Lombard where the hospitalization charge is say 5,000 rupees, and in the other say HDFC Ergo, if it is 6,000 rupees and my hospitalization cost is 10,000 rupees, then I will be in a position to claim with one insurer, which is maybe HDFC Ergo, and I will be paid 6,000 rupees, and that is the end as far as that particular risk is concerned. Is this understanding about this correct or not? I would request you all to go through this provision and then indicate. And if you think that in operation it is different, then also you can indicate. So I will halt for a moment in respect of this particular clause and would like to get your information or feedback. So for those who have been in general insurance and who have handled health insurance claims, like Ajit sir or maybe even Satish could chip in and give his opinion about how he is dealing with this. Or even Masood sir, depending upon his son's claim experience only. Anybody?
I'm supposed to go to HITPA for that, the balance claim actually.
You are supposed to go to
HITPA, I have told them that I'll be claiming the balance amount from you. Because my son claimed from the policy which he had got from his organization.
Okay.
But I have continued my son in my family policy.
Okay.
So I mean, the amount which he got from his insurer was not adequate.
Okay.
So now I'm claiming from my policy, my group mediclaim policy.
Okay.
I'll see how they are going to treat my claim in HIPAA.
Okay. So you have some unpaid amount in your hospitalization cost also?
Yeah, actually, my son was not aware because he joined a new company recently, and earlier companies they had a big package. But this
Okay.
company, they gave him a big package, but the sum insured they have reduced drastically. I mean, the health insurance.
Okay.
He was in for a shock when the TPA told that your sum insured is not adequate to cover all the costs.
Okay.
So I then said, okay, balance I'll claim from my this thing. So I informed HIPAA, and I'm supposed to, not tomorrow, day after tomorrow, I'll be submitting all the claims, all the papers for a reimbursement. So let's see how they decide. It will be interesting for me also.
Mallikarjun sir, slide please, sir. Slide please.
Slide, yes. One thing I will show you the clause itself, no? So I will read out the clause that is there. 24, no? If two or more, I hope you are able to see this, no? If two or more policies are taken by an insured during a period from one or more insurers to indemnify treatment costs, the policyholder shall have the right to require a settlement of his or her claim in terms of any of his or her policies. 1. In all such cases, the insurer who has issued the chosen policy shall be obliged to settle the claim as long as the claim is within the limits of and according to the terms of the chosen policy. So this is simple, nothing very difficult about that. The second thing is balance claim or claims disallowed under the earlier chosen policy or policies may be made from the other policy or policies even if sum insured is not exhausted in the earlier chosen policy or policies. The insurers in such cases shall independently settle the claim subject to the terms and conditions of other policy or policies so chosen. So it means that where there are some elements which are not covered there, but it could be covered here, I will take it to a second fellow and show. And then he will see depending on policy whether the amount that is payable. Then he will pay. So like this, if I have 3 people, then I can take it to all the 3. So sab mein paise aa jayenge, so it will be okay. Then if the amount to be claimed exceeds the sum insured under a single policy, after considering the deductibles or co-pay, the policyholder shall have the right to choose insurers from where he or she wants to claim the balance amount. So abhi mere paas, say I have still got 1000 rupees to claim, so iske paas jaun ya uske paas jaun, he can still consider and he can choose. This is the one where the fourth one is where an insured has policies from more than one insurer to cover the same risk on indemnity basis. The insured shall only be indemnified the hospitalization costs in accordance with the terms and conditions of the chosen policy. This is where this particular thing ends. So now, Sudhakaran sir.
Yeah, yes, sir. So regarding point number 1, it is correct. Everyone can understand.
Yes.
Regarding 2, that point, please, sir.
Yes,
that circular.
Yeah.
Regarding point number 2, I have taken a policy with A insurer for a sum assured of 5 lakhs, where the hospital expenses is restricted to 1% of the sum assured. Okay.
Okay.
So my hospital expense per day will come only 5,000.
Okay.
I have also taken a policy with insurer B for another 5 lakhs.
Okay.
Wherein the hospital expense is also 1% of the sum assured.
Okay.
Okay. Okay. Suppose I was admitted in a hospital and my claim for per day hospital expenses room rent is 7,000 rupees.
Okay.
What I will do, I can choose A insurer and I can get 5,000 rupees per day room rent and balance 2,000 can be claimed from insurer B. That was the point number 2.
Okay. But now one small thing. Now in the respect to the same, how does point 4 read in relation with these two?
No, point number 4 is separate. Suppose I am having a policy of same insurer A with 5 lakhs and same policy, another policy with insurer B, and my hospital expense is within the limit of policy A. My room rent doesn't exceed 5,000 rupees per day. So I can claim only from either from A or from B, but I have chosen to claim from A. So I can choose only A.
Okay.
If it is within the limit.
Okay. Okay, so it is basically incorporating the principle that I should be gaining out of my hospitalization expense. Okay. Yes.
Yes, sir. I can understand like that only, but we can see the views of others also.
Actually, this whole condition has not been properly worded.
Correct.
Not properly worded. I mean, that means not
this came when the regulations were introduced.
Actually,
so we have settled many claims where one party is with other insurer and the balance, even the copay is deductible. That was also paid from the second insurer also.
Okay.
So this only what Mr. Sudhakaran is saying is correct. That if the claim amount is within the sum insured of one policy, then there is no need of going to the other insurer.
Yes.
One insurer should only settle it. But this wording is not very clear.
Yeah, because the contribution condition is different in health. No, other equally they have to share the loss, but here it is different. Yes, you rightly pointed out there.
Basically, the contribution condition as per Marine Act is for the simple reason that the insured should not benefit from his loss.
Yes.
But in health insurance, it is something very different. Health insurance, the overall cost of there is an eco-incident.
Sir, your voice is echoing, sir. Masood sir, voice is echoing.
You have to remove the headset.
Yes.
Correct.
Is still echoing?
No.
Yeah.
Huh?
Now it is better. No echo.
No echo.
Yes.
So what I was saying is that in health insurance, actually, if you look at this aspect of contribution, it does not happen for the simple reason that the policy, the sum insured, is not adequate, because health insurance, the cost is something not where you can arrive at a sum insured. So in health insurance, sum insured cannot be fixed. Actually. I mean, if you look at the principle of indemnity, then health insurance fails the principle of indemnity. You cannot arrive at a sum insured because you don't know the sum insured. You never know which sickness you'll have and how much you're going to, or how much it's going to actually cost you for a particular. So we cannot apply contribution in health insurance because it will not do. But the problem is that I have taken two policies. One policy is for 5 lakhs, another policy is for 7 lakhs. And this first policy is exhausted. 5 lakhs is fully exhausted. So I can take the balance amount from the other policy because my total sum insured is 7 lakhs. And I have taken policy by design or by otherwise because I didn't know whether 5 lakhs would contribute for my treatment or not. So health insurance, you have a situation where you don't know what will be the actual cost. In motor insurance, you know, fire insurance, you know, marine insurance, you know.
Correct.
In health insurance.
And the terms of individual policies also could be different so much that you can't put both of them in the same category also. So there could be so many nuances to a policy that could be making them totally different. It's not a similar policy that you are having. So that's
Mallikarjun sir, to avoid this only insurers
seems to
Mallikarjun sir,
something to say.
To avoid this, the insurers have shared that top-up policy.
Correct.
Where they can select a threshold limit, 5 lakhs, 3 lakhs. Above that 3 lakhs or 5 lakhs, only the policy will trigger.
And the
so like that also, with lower premium, very low premium.
So correct. Yeah, Amandeep sir.
Good evening, sir.
Good evening. Good
In
evening.
fact, to my understanding, this contribution clause was relaxed by IRDA when 2013 regulation was made in health insurance. So
Okay.
thereafter, the provisions were made that the insured had the option to choose any of the insurer in case of the multiple policies.
Okay.
So in that case, I don't think there is any practical problem, except the problem lies where a particular TPA is not servicing a particular hospital when you are hospitalized. The
Okay.
best part is any insured person needs to intimate both the insurer if he is having two policies or three policies. When he is hospitalized, he needs to intimate to all the insurance companies saying that in the event of I am claiming, hospitalization benefit from X policy, and in case it exceeds to my limit in X policy, I have the right to claim from you, from
Correct.
Y or Z policy. So that is the only requirement.
Okay.
And even cashless treatment can also be offered if the particular TPA is servicing both the insurance companies and the hospital is on the panel of both the companies, right?
Okay.
Only problem comes where one insurance company is not on that panel and he needs to have the reimbursement. Then every paper, document, file, complete file which has been claimed for X insurer has to be submitted to Y insurer for claiming the reimbursement. That is the procedure which is practically being happened.
Okay.
Yeah.
Okay. Okay, sir. Thank you. Sir, and thank you, sir.
Thank you. Thank you, sir.
So this is about multiple policies. The next 1 minute. Loadings on renewal. So for individual products, the loading on renewal premium, so it could positive or negative as per entire portfolio performance. So it should not be based on individual policy claim experience, but it should be on the performance of the entire portfolio is what is indicated. And this same thing is indicated there also, that you should not deny renewal based on the claim experience that is there in your policy. Then discount and loadings offer should not be at the insurer's discretion. It should not be something that they should be doing for manipulating the pricing of the product, but it should be based on objective criteria, and it should be disclosed upfront in the prospectus and policy document with objective criteria as approved under the product filing guidelines. Then no fresh proposal or underwriting should be done at the renewal stage where there is no change in the sum insured. However, where there are improvements that are there for the purpose of removing the loadings that were incorporated at the time of issue or previous renewal, those can be factored in at the time of renewal. But you're not supposed to do any fresh underwriting or taking a fresh proposal where there is no change in the sum insured. So basically, ensure continuity. Then protection of policyholder interests. So their insurer is supposed to be provided a customer information sheet as specified by IRDA. Then this also is supposed to be issued again as guidelines. Then have systems, procedures, offices, and infrastructure for efficient issue of pre-authorization on a 24/7 basis. Then they should also have systems for prompt settlement of claims and grievances. Then about settlement and rejection of claim, it is the insurer who is supposed to settle or reject claim, and they should do it within 30 days from the receipt of last necessary document. They have put one emphasis there by putting it in quotes in the regulation. So the thing is amplified, saying that they should not ask for any document which is not listed unless there is any fraud suspected. And to get over that, they want some documentary proof, they can ask for that. And all the documents have to be asked in one go and not in piecemeal manner. Then insurer should indicate the time within which the claim and documents are to be submitted. However, they should not reject a claim merely because of delay if they show valid reasons for the delay in filing the claim. Then the claims to be disposed as per the terms of the policies, and they should not be closed. That is, without informing about the payment of about the settlement or rejection, you shouldn't simply close a particular claim. So this is as far as claim and settlement is concerned. Then next, minimum disclosures in policy document. So the disclosures that are supposed to be made are as per the policyholder protection regulations and also as per the health insurance regulations, whatever is stipulated. Then the procedure of claim submission, timelines and action if not adhered to. This is also supposed to be disclosed. Then where there are sublimits on covers offered, what are the sublimits and what is the impact of these sublimits on the overall cover under the policy? That has to be incorporated and disclosed. Then where there is a delay in payment of interest, then penal interest that is supposed to be paid as per the policyholder guideline, that is also supposed to be disclosed. Then most importantly, the details of the TPA address, contacts, etc. have to be also furnished. So this is as far as the minimum disclosures. Then there are other disclosures also which needs to be brought in, where they are specifying a TPA based on the product, geography or location. Then this list of TPAs has to be provided and it has to be duly updated. Then where product wise cashless services are offered, those details have also to be furnished. Then in case of pilot products, as I already told, they should name it with a pilot product tagline. Then they should indicate that it is a pilot product and say that it is close-ended, and what that they have a period of 5 years after which it could be either discontinued or regularized, and that there will be an option for migration. All these have to be disclosed at the time of issuance of the policy. Then list of network providers is also supposed to be provided to facilitate the handling of to facilitate the policy holders in getting the health insurance benefits. Then these are all normal aspects relating to administration of policy. So the cashless facility for treatment will be by the network providers. Then the reimbursement facility will be where there is a non-network provider where you are getting treatment. Then the administration of health plus life combi products will be as per Schedule 2, which I briefed you about. Then the requirement of pre-authorization by insurer or TPA. This pre-authorization, there can be exemptions only in times of emergency. Otherwise, there has to be a standard form of pre-authorization, and that form needs to be filled in, and the pre-authorization has to be taken for cashless treatment. Where there is a reimbursement claim, the standard form relating to that also has to be made available to people. Then identity card and the details that are supposed to be there. Then the smart card incorporating details. So these have also to be provided to ensure that the health policy is ably utilized and also administered. Then continuance of cashless facility. So where a hospital is being taken out of the list of network providers, but someone is already getting the cashless treatment, this treatment will continue even if the date of removal of this hospital is coming in the way. Then the insurer can enter into an arrangement with other insurers for sharing network providers and transfer the claim and transactional data in areas where they are not servicing that particular providing the service. So the sharing of the resources for the policyholders' benefit can be an aspect of administration of health insurance policies. Then 31 talks about health service agreements. So basically for providing cashless facility with registered TPS. Then the agreements could be amongst insurers, between insurers and network providers, or where TPAs are there between TPA, network provider and insurer. So it could be a bipartite agreement or it could be a tripartite agreement. And there are certain items that need to be disclosed in this particular agreement. So what is the rate? Then the other important aspect that is incorporated here is the agreement should specifically indicate that it is the insurer who is denying or repudiating the claim. Then there should be a provision for inspection of premises by the insurer. Then what are the events in case of discontinuance by a TPA? Have a continuity of service. All these are supposed to be provided in the health service agreement. Then the agreements should ensure that they have sufficient agreements with adequate network providers so that the public who are enjoying the facilities, they have access to these hospitals so that they can derive the benefits instead of going for reimbursement claims. Then payment. The payment should be through the banking platform directly if to the network providers in case of cashless policies, and also to the policy holders in settlement of reimbursement claims. And but where the policy holder or the claimant wants the payment to be made in check or DD, the insurer should not refuse. Then engagement of services of TPA. So they should provide product-wise guidelines to TPA. Basically, the intermediation function in claim settlement is done through the TPAs, because of which they should be provided information about handling of claims and the product related guidelines. Then individual products detailed guidelines of claim handling also should be furnished. Then they should ensure that the TPA does not reject the claim, because the power to reject or deny the claim is only with the insurer. They cannot hive it off to the TPA. Then make payments to hospital claimants and policyholders. So TPA should not handle the financial part of it. It's the insurer who is supposed to ensure that the financial aspect is handled. Then the TPA should not offer any service which is not in accordance with the TPA health service regulations. Then as far as settlement and denial of claims is concerned, again they have reiterated that insurer is responsible for the servicing of the policy holders. Then insurer's decision, and it is the insurer's responsibility to communicate claim denial. And while they are communicating this, they are also supposed to give the reasons. Then they are also supposed to tell them that they can approach the insurance ombudsman and give particulars of them for taking up the complaints. Then TPA to collect documents for processing of the claim. So basically they are a service intermediary, and they should be handling that topic, that aspect only. Then you could have more than one TPA engaged by an insurer, and similarly you could have more than one insurer engaging the same TPA. Then change of TPA. So where there is a planned change of TPA, 30 days prior notice should be given to the policyholders before change. And they have to be intimated about the details, and contingency arrangements should be made. Where they are entrusting it to a different TPA, then transfer of data and other things should happen within 30 days of cessation of services. Then there should not be any inconvenience or hardship caused to the policyholders because of this. Then 35 talks about data and related issues. So there should be a seamless flow, and by and large, it should be an electronic data flow between the insurer and TPA, so that the speed of transmission and the ease of claim settlement happens. Then claim settlement files have to be handed over within 15 days to the insurer. Then hospital, TPA and insurers are supposed to comply with the guidelines of IRDAI relating to data and related matters. Then the systems have to be put in place to mitigate frauds, because health insurance, the biggest problem is frauds. Then 37 talks about submission of returns. So all insurers carrying health insurance business are supposed to submit returns as specified by IRDAI. Then repeal and savings and removal of difficulties are other two provisions. So the regulations of 2013 and amendments regulations have been superseded by this regulations of 2016. And wherever there is a need for clarifications to remove difficulties in implementation of these regulations, the chairperson can issue clarifications, directions or guidelines. So these are the provisions as far as the health insurance regulations are concerned. So the schedule 1 is talking about portability, while schedule 2 is dealing with the administration of health plus life combi products. So this is as far as this health insurance regulations are concerned. So as far as the portability and other things are concerned, you have the details provided here. So the portability is important basically to ensure continuity of benefit, especially as Mr. Wahab sir has indicated, for continuity of benefits.
Can I say something at this stage?
Yes, sir.
Actually, see, I mean, this group, we have quite a few surveyors, and since they don't have to deal with health insurance, so maybe they may not be aware of most of this regulation. And even those insurers who are there in the group, they may all not have dealt with health insurance. But just one request to you all is that please try to health insurance both from the legal aspect, that is from the regulatory aspect, and from the product coverage aspect, for the simple reason that we have a feeling that there will be a lot of arbitration cases in health. And we feel that in health insurance, the sum insured is not much. So people may not go for arbitration in this. And generally, arbitration is on big policies and where the sum insured is large and all that. But we are going to approach IRDA soon that the costing of this arbitration should be done in such a manner that arbitration doesn't take much time and arbitration can be done in health insurance policies where it is mostly needed. You must have been seeing a lot of news coming out that a person has incurred 10 lakhs during this COVID period and he has been paid 5 lakhs or 6 lakhs or 7 lakhs. So there is a lot of possibility of arbitration in health insurance, and we are not looking at arbitration in health insurance for in a long-term manner. In health insurance, the arbitration should be for in a day should be resolved, in 2 days it should be resolved, maximum in a week time should be resolved, provided the arbitrators they understand health insurance. So my request to you all will be that even though you may be expert in fire insurance, you may be expert in health, motor insurance, or maybe you have a very good idea about this business interruption policies, the loss of profit policies, or marine insurance. But health insurance is an area where there will be a lot of arbitration. And once we are basically ready with our platform for arbitration, I have a feeling that there will be a lot of arbitration cases, not from the insurers, but from the insured. So we cannot say no to them when these arbitration cases will come to us. So, I mean, we can take them only when we know that you people are ready with, and here, I mean, in a day's time, you can arbitrate on a health insurance matter, provided you are well versed with health insurance regulations and the covers. This is a request because I mean,
one more thing, if you see the standard health insurance policy that is there, Arogya Sanjeevani policy that has been brought out, in that also there is an arbitration clause which is provided, and there also it is like the standard clause that is there, saying that where the liability is admitted, but there is a what is it? Any
quantum.
Quantum dispute is there, then they can be arbitrated, is what is the clause that is there in the Arogya Sanjeevani policy also. So, but one thing as far as the arbitration is can be provided as a mechanism here, but because these are personal lines of insurance policies, the most of these kind of cases relating to health insurance will probably land up in the insurance ombudsman's office, where there will be a mediation of the ombudsman and an adjudication of those.
The problem with ombudsman is that problem with ombudsman is that I mean, like insurance companies are not obeying most of the time, and nothing is being done. But in arbitration, that cannot happen.
Absolutely.
Yeah. So only thing is that arbitration has to be made very efficient, cost effective.
Correct.
And which we propose to do. I mean, last time. Since the this member IRDA was there and he was interested that we should come out with our suggestions. So we are going to go for that. Take some time, but frankly speaking, this platform which we are setting up for arbitration and this training program, this course which we are having is ultimately that through you people arbitration should be done in insurance, not just in a specific area, but all areas of insurance. Fire insurance, you may be getting for the entire year, maybe 1 or 2 arbitration cases. I mean, engineering similarly, marine also like that. But in health insurance, motor insurance, these are the areas where you will be having maximum arbitration for small amounts. One of the retired judges who was also, the presiding judge of one of the Delhi district forums, he, joined us to. We decided to come out with a law journal, but subsequently he quit. He said every day he's getting 2 arbitration cases, one in the morning, one in the afternoon. So he said, I don't have time for anything else. I'll be doing arbitration. And I'm looking at a similar situation happening in insurance, especially in the area of health insurance and motor insurance. It will take time. It will not happen immediately, but we are pushing for that. And once things are in place and people start knowing that they can have a better a better way of getting their grievances through arbitration, people will be coming out, because health insurance is an area where a lot of people are suffering. So for this reason, I am saying, please, this area you have to give more attention, this health insurance area. Yeah, please.
I'll just take you through this arbitration clause that is there in the Arogya Sanjeevani. So I just managed to locate that from the IRDAI website. So I'll share it. You can just have a look at it. So I hope my screen is visible.
Yeah.
Yes. So this is the clause. Arbitration. If any dispute or difference shall arise on the quantum to be paid by the policy liability being otherwise admitted, such difference shall independently of all other questions be referred to the decision of a sole arbitrator to be appointed in writing by the parties hereto, or if they cannot agree upon a single arbitrator within 30 days of any party invoking arbitration, the same shall be referred to a panel of 3 arbitrators comprising. So this is the one. It is clearly agreed and understood that no difference or dispute shall be preferable to arbitration as hereinbefore provided if the company has disputed and not accepted liability under or in respect of the policy. It is hereby expressly stipulated and declared that it shall be a condition precedent to any right of action or suit upon the policy that award by such arbitrator or arbitrators of the amount of expenses shall be first obtained. So technically speaking, where there is a difference in terms of the amount paid and the amount claimed, people can still go for arbitration, provided they are bringing that out. So any deduction which is inadmissibly done by them, then you can take it up for arbitration also. But you need to have the people who are there so that they can say that these many people are there who can take up arbitration. Then probably people will start approaching for arbitration or invoking these kind of clauses. So for all you know, even our current health insurance products also may be having this kind of a clause.
So arbitration has been there in health insurance already.
Yes. So but it needs to be activated. And it needs
that is
simple. So like whatever Mr. What is it, late Shri JLN Murthy was suggesting. So 400 rupiah, 500 rupiah kind of a fee you incorporate and then say that you resolve these disputes. Probably a lot of good can happen even than going to the insurance ombudsman. You could have finality and finish off with it. So there is a scope for arbitration to be promoted in insurance, provided, as sir has indicated, cost will be a factor and then quickness will be there. And people who are in insurance.
A person who has a policy for 10 lakhs, he has incurred 8 lakhs and he gets 3 lakhs or 5 lakhs. So for balance 5 lakhs or 3 lakhs, he can spend 15,000, 10,000 like that. Knowing that this is going to be effective. But then whom should he go to? That is the problem. So if we people, trying to be arbitrators and we take this area health also, I know all of you may not be interested in health insurance, but this is going to be a large area for arbitration, health insurance, motor insurance. Because in India, we don't, fire policies and marine policies and engineering policies, we don't have that many. And of course, we will definitely want to have arbitration in those areas. But then these are the areas where it can be, for the arbitrators, they can be the bread and butter kind of thing.
It be a volume business in health insurance. Yes, sir. Mr. Mellon,
what you're saying is right. You can have arbitration in that, but you must have only sole arbitrators.
Absolutely.
You have 2 umpires, 2 arbitrators.
No. See, that's what I'm saying. Yeah. That's what I'm saying, that we will be pushing for this, that in health insurance there are so much of grievance, so much of grievance. So there should be, like Mr. Milan Mehta, one day he is disposed of 6 cases of health insurance, something like that. So once you have that image that if you go to Mr. Milan Mehta as an arbitrator, he will dispose of the matter in, say, 1 hour, and people will accept.
So
that is what we want.
Ability and knowledge in that sector, that will be something which will be the determining factor. So just like you have
insurance companies will be happy, because their cases are getting resolved in a daytime or week's time instead of going to courts for years. The cases are getting dragged on.
All these would be fairly repetitive. It would not be difficult for anybody to work as a single arbitrator.
Correct.
I mean, that is what has to be encouraged, almost like an ombudsman.
Exactly.
So he does it and moves on.
In fact, a more specialized person and a more larger number of people you could have. Ombudsman, you have 17, but just about 6 of them are from the insurance field. While there are 6 district judges and maybe 5 or 6 civil servants who are there, who are probably.
It's not difficult at all.
Absolutely. So that's about it as far as I am concerned.